Hi, welcome back. My name is Peter Vu, and I will talk to you about one particular stock that I truly feel will 2 to 3x in the next 5 years. It is called AECOM. Okay, I'll show you the company. So this ticker symbol is called AECOM. Or the ticker symbol name is ACM. And just to show you the video.
It's day 65 of the Biden presidency, and Joe Biden is already preparing for his second multi-trillion-dollar legislative push. He made it clear yesterday that his priority to help the American economy now is infrastructure. The president teased an announcement that is expected next week on what this next massive plan will include. Listen.
It's the place where we will be able to significantly increase American productivity, at the same time providing really good jobs for people. But we can't build back to what they used to be.
CNN's Christine Romans has more on what could be in the plan.
So this
Kate, the next big priority for this White
the headline ticker is Biden expected to unveil $3 trillion jobs in infrastructure plan next week. So this is major, massive, more than any company right now that has EV or even weed or anything. This is a massive $3 trillion. So I'll just show you what ACOM do. So they touch on all these sectors, and ACM is the world premier infrastructure consulting firm, partnering with clients to solve the most complex challenges and building legacies for generations to come. They're ranked by Fortune magazine the world's most admired company in this industry, and announces leadership appointments for the global transportation program and management of business. So they have a lot of good news coming out, and I'll show you their pipeline. So this is their pipeline. I just show you what the pipeline Hyperloop in Texas. Well, I live in Galveston, so they're trying to build this beautiful station. And what Hyperloop is like a little train station, but it's like a little pod that came out. It was in the idea from Elon Musk. He thought, why wouldn't we go inside these little pods, and it's faster than a train. It goes from faster than a bullet train. It goes fast. I don't know how fast, but it goes faster than a bullet train, and it goes from here to Houston to Dallas in about 45 minutes. And if anybody who lives in Texas, they would know that would take them 4 hours drive. 45 minutes is really fast. So just to show you, high technology companies, HyperOne and Arrival. They're partnering with Hyperloop One, and building a Texas Triangle. So in such a way that Dallas and Austin, they're trying to build it for all these major cities. So Dallas to Austin, 200 miles apart, and be effectively closer travel time than Dallas to Plano. They're trying to create these, and I'll show you what they're trying to build. So they're trying to create long miles of Hyperloop from Houston to San Antonio to Laredo, Austin. So this will connect all Texas. Trip duration, oh my gosh, Dallas to Austin, 19 minutes. San Antonio to Houston, 8 minutes. Austin to San Antonio, 8 minutes. Dang, that's real fast. So let's show you more pipeline stuff. Okay, so we talked about the Hyperloop. So the future is here. Hyperloop is a transportation for people and goods. They're in the future. Their pipeline is spaceport and commercial travel. They're thinking ahead. Something like Apple. They're thinking ahead all the time. That's why their company is valued, at 1 trillion, 2 trillion. So we're thinking. If you see this, This is just 3D imagery of, in the future they want to create infrastructure on the road that if a car that's electric powered, they will stop in the road, and then it will, it will charge their car in the so the growth of electric vehicles limited motorists concerned over vehicle range and charging infrastructure. So they're trying to create charging infrastructures. So they're trying to create autonomous vehicles. I've seen this in TSU. So they have these cars that goes by itself for a certain mile. It goes by itself. The planning ready for the infrastructure programs, self-driving cars, buses, trucks, and realities of the world. So that's what they're trying to do: autonomous vehicles. And Hyperloop I talked about, and they're gonna try to create some in Los Angeles. Uh, you know, they have a lot of planned ideals. Hype, and they're trying to create high-speed rail. So the first inter-country high-speed rail servicing in Southeast Asia, and will connect travelers between Kuala Lumpur and Singapore in just 90 minutes. So Kuala Lumpur to Singapore is very long, but 90 minutes, that's really fast to go. And flying experience from Hong Kong, China, Macau, Spain. So they have a lot of things in the pipeline, and they're going to create more airports, like uh, you know modernize the airport system, and hopefully down pipeline, maybe 30-40 years from now, they'll have more commercial for spaceports, and who knows, they might partner up with Virgin Galactic, create more spaceports and stuff like that. So I do believe this stock could be, I don't know, in the future it might be $200-$300, because just like Boeing, nobody think Boeing would be, but if Boeing was the future, they kept innovating. Now they're like $300-$400. This company could be like that in infrastructure, though it's kind of, people think, oh, I'm trying to buy penny stocks, but this stock, if you hold it, and you can see their chart, this stock actually holds its value. So since 1 year chart, since April of 2020, uh, it did drop because of the pandemic, but after that it just kept going up. It holds its value relatively steady, stable. Goes like 1, 2, 3 points down, but it holds its value over time. And right now it's like really increasing. I was thinking of buying it when I was 50, but I just kept looking at it. But now that I do more research on it, I'm really liking this company, and I do feel like this stock could be $100 within 1 year. Next year maybe 200, 150 to $200, and beyond, I don't know. But let's look at their financials. Their finances, their revenues are staying steady. They increased from 2017 to 2019, but had a lag year of $7 million off, or I think that's 7 billion or million. I think that's billion. So $7 billion off, and they're right on track for with the same trailing 10 months. They're doing not that bad, but I do believe they could go back to that level within this year or even the next year. So I do believe their EBITDA earnings before interest and taxes. So they're doing pretty good, and let's see balance sheet. See the total assets over total liabilities. They're doing okay. So they have more assets than they're liable for, and they're paying down their, as you can see, they're paying down their debt. So that's good. They had debt and they're paying it down, and their debt, their net debt is decreased from 2 billion to $353 million, and total shares issued, which is good. They don't need the money from investors too much. Let's look at the cash flow. Cash flow, not too doing bad. They had the off year. They were down by 400 million right there. Operating cash flow. But what I love about them is that they keep investing. So 2 billion investing, 2 billion investing. They keep investing. So they're investing in the future. So they're putting a lot of money, like Palantir. They're putting a lot of money in investing, and in research. So and they're still ending up with a lot of money left over. 1 billion left over. 1 billion left over. And free cash flow, they're $429 million. They can give back to the investors, and so it could be one day they can give dividends. Right now they don't, but this stock is amazing. I do believe this could be 10x, 2 to 3x in the next 2 to 3 years. You want to hold it. I'm holding it. I sold some of my other stocks to put some money here. And if you can see the Dow Jones, mostly this is because of the increase is because of the rise in industrials and infrastructure, and oil and gas is doing pretty good. And this is because of that. Nasdaq is still lagging. So this is the next ticker symbol that I feel. I researched in Houston, and they have a lot of interesting companies that are coming out in Houston that deals with aerospace. This company deals with aerospace, defense, energy, and chemicals, intel, data science. It touches on all those sectors. Another construction company, another infrastructure company. It reached this kind of its peak, I think. Hopefully, it could be an $80 stock, 2 to 3 years, but it's reaching its peak. But this is an interesting company too. Just show you the website. I haven't gotten to that, but this is a very interesting company. So they're touching on engineering, technology, modeling, construction, all these, even drones. They're based in Houston, and they're a very good company. Aeronautics. Aeronautics is big right now. Let's see their market cap. I haven't looked at their company into that, but it's their shares are steadily rising. Let's look at their finances. Their market cap 5 billion. I mean. So their shares are revenue is increasing. It's good. Not that much, but it's good. They're having gross profit. EBITDA, this is decreasing a little bit. Okay. Balance sheet. Total assets over total liabilities, check mark. They increase their liabilities, increase their assets. So number of shares decreasing, so that's good. Net debt, total debt increasing though. But let's see the cash flow. So they have good cash flow, positive, and let's see, free cash flow. They have a lot of free cash flow, increased by 100 million. So this is a good company too. But I haven't researched. But all these companies, the infrastructure companies, they're increasing because of Biden's new infrastructure bill. So just stock update. to show you him stop. Okay, Hims is a telehealth company that sells prescription over-the-counter drugs online as well as personal care products. The company is best known for selling generic treatments for erectile dysfunction and hair loss. So they recently had a new news. As you can see their Twitter. I'm not gonna say their new news because it's pretty provocative, but well, this is there. You can tell what it is. So the O-ring, that thing, and well, it's because their company they're trying to gear towards the millennials, and the millennials they're into more modern stuff, more technology, and they're wanting that sexual health, mental health, and that could be good for your I guess sexual health or something. But their company is still young, and they're trying to figure out well, what should we promote to our audience base. So they're trying to figure out like what that. So I sold a couple shares because I feel like um, I have doubts about this company still, but still holding on to 100 200 shares. But I still hopefully this can go up to back to its levels of let's see this company. Hopefully this company can go back up to its levels of maybe hopefully 19 or even 20s, back in the 20s. So we're looking at 13 right now, 1340. They've been kind of doing bad. This has increased because of they fall in line with the Nasdaq, I think, and if the Nasdaq goes up, this is part of technology, an app or something with subscription based. So they're a subscription based company. So more people subscribe, more people are willing to pay for this company. So financials, their finances just came out. So their revenues did pretty good. Cost of revenue, gross profit about $100 million. Operating expenses, so operating income, they're not making money, but EBITDA not doing that good. So balance sheet, assets or liabilities X. So they have because they just hired a bunch of people. They try and expand more. You know, um, I don't know. They don't have any prior years. They just came out with this year. Um, Operating cash flow, investing. They're investing a lot. 28 million. Free cash flow. They don't have any free cash flow. This company, I was really bullish, but now I'm just seeing like they're trying to they're trying to figure out what they're trying to do. So they're still young. They're trying to figure out. They have a young um, CEO. He's only 31, so he's trying to figure out what he's trying to do, and it's still young. So I don't want to put all my money into it. So I took out a lot of shares just to make sure that once they get figured out, maybe I'll go back in and put a little bit more. But right now I only hold about 100 shares, and so yeah. So next company, which I really do bullish about, is Voyager stock. So this company I talked about multiple times is if Bitcoin goes up, it's usually during the weekend Bitcoin goes up. So we can see Bitcoin. So Bitcoin goes up in the weekend. Even it was high as 59,000. 57,000 right now. Oh, 55,000. $55,214. So on the weekend, Bitcoin goes up, and this stock go if there's like a third party, so people have to use this app to buy Bitcoin. So there's any fees incurred, they would generate money from the fees incurred. So analysts are projecting. So analysts on Yahoo Finance, they have current year they're doing a 10,000%, 10,188.90 in revenue, and last year they had 9,854%, 54.70 in revenue, and next year, well, 126 and 20 cents percent in revenue. So I do think there could be more than that. They're just projecting sales growth. Because Bitcoin acts like gold. People put stuff money in there because they do see like government isn't doing too good, so they stuff a lot of money into Bitcoin, so it can't be traced, and criminals. That's the one thing bad about Bitcoin is that criminals, even who knows bad people, they put stuff money in there, and it can't be traced. That's the one bad thing about Bitcoin, but yeah, and it went high of $25, which was pretty nice. But I did feel like this could be $60 one day this year, because we see like Mara and Riot, uh, they're both companies that do bit mining. They they have increased significantly from their lower ranges, and they went increased. So I do believe this stock could be like $60 range once Bitcoin goes up and stays up. Then this company could benefit too. So those are my plans, and I do believe I'm not your financial advisor, but I do believe you should go and look into AECOM stock, and this could be the future of infrastructure. And thank you. Goodbye.